Dianna Howell with the Howell Group, and today I have a very special guest. I have Zell Railey with Weber Mortgage, and he is going to talk to us today about forbearance. Thank you for coming, Zell.
Well, thank you for having me. I appreciate it, Diana. So, forbearance is basically, in a nutshell, a way for a homeowner to defer their monthly payments for a short time.
Okay.
What a lot of people don't know is forbearance has always been here. It's always been an option. Of course, with the COVID-19 of the past few months, it's really come to the forefront, and now everyone knows about it, but it has been here for quite a long time.
Because I think a lot of us thought this just started because of COVID.
Right. No, and it's understandable because everyone's talking about it. Of course, with everyone, some people being in financial difficulty, people are talking about it more. Your servicers are actually offering it and advertising it, but it has always been an option for people that need it.
All right, so exactly what is forbearance?
Forbearance basically is a way for you to defer your payments for a short time, generally 3 months, sometimes out to 6 months. So basically you don't have a mortgage payment for 3 months if we're going with that option.
So is it forgiveness of those monthly mortgages?
It is not forgiveness. No, that's the big thing. And that's when this first started in March and April, everyone was thinking that it was forgiveness, but it's not. There are a couple ways that it can be done, and it is dependent on your servicer. So I would tell your borrowers, the homeowners out there, talk to your servicer and find out exactly how they are running their forbearance program. Some of the options are, when you come out of forbearance, you can pay the entire past due amount right then and there. I think that's probably going to be the least used, just because people are not going to have that money saved up.
So how long is a forbearance period? Is it 3 months, 4 months?
Again, it depends on your servicer. Some are 3. I think the max you can do is 12 months. But anywhere between 3 and 12 months generally is what you're looking at.
So as a consumer, if I took forbearance and let's say it's 4 months, I would have a hard time on that 5th month paying 4 months plus that 5th month. That's 5 months mortgage payment.
That's 5 months at once. That's why that option I think is going to be the least used. Other options are you can take your past due amount and pay it back over a certain number of months. Over generally what we're seeing now is the next 12 months, you'll pay your standard monthly payment, and then whatever the past due amount is divided by 12, and they'll add that to those payments.
Do you think it's possible to add those monthly payments to extend your 30-year loan plus 4, 5 to 12 months?
That is the third option, and that's what some servicers are doing. Is so you don't have an inflated monthly payment when you come back. You have your original monthly payment, and then yes, they'll just add it to the end of the loan term.
So how does one go about deferring their payments?
Call your servicer.
Because every servicer is going to be different.
Every servicer is going to be different. They're going to offer different programs. Call your servicer. So and ask them what they need from you to prove that you need the forbearance, and then the options they have to pay it back.
And are you eligible to purchase another home or refinance if you've taken forbearance?
You are actually. For conventional loan programs, you can be in forbearance, but as long as you have continued to make your monthly payments and not been late, you are eligible to purchase and to refinance. If you have gone into forbearance and have not made those monthly payments, you have to be on a payment plan and made a minimum of 3 payments on time in that payment plan, and then you are eligible to either refinance that loan or purchase a new house. So that's for conventional loans. For government loans, VA and FHA, it's a little trickier because you're dealing with the government.
Of course.
And the short answer is the government has not put out clear guidance. They have put out memos, but they are very ambiguously worded. And so in light of not having a clear guideline from the government, most lenders are saying government loans are not, if you have a government loan, you are not eligible to refinance or purchase at this time.
Okay.
The simple fact is just because the government hasn't told them yes or no, and so they're erring on the side of caution.
So we're watching to see what they do.
We are watching and waiting at this point.
Okay. So just to recap forbearance is pushing out a couple of loan payments, maybe up to 12 months, to be added maybe at the end or divided equally among so many months to pay it back.
Correct.
And you need to speak to each service provider. Make sure you call your service provider. Don't just decide to do it and then skip a payment, because they're gonna come after you, right?
Right, that's correct. If you are not in forbearance and you skip a payment, it's gonna show up as a late payment and hit your credit.
So be sure and make that phone call.
Yes,
to
make
your
the
provider.
phone call. If there's one thing you get from this, it's call your servicer.
Yes, because they can answer every question
They can.
with what programs they provide.
Absolutely.
Okay. And there is hope to purchase another home
There is.
and maybe even refinance, which I can't imagine the rates going any lower than what we're seeing right now, because we're in historic low interest rates.
We are,
So,
yes.
Yeah. Well, Zell, thank you. If y'all have any other questions, Zell's contact information is below, and you can contact him. And be sure and call your service provider though for specifics on the forbearance program and see what you're eligible for. I'm Dianna with the Howell Group. Thank you for watching.